welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Priya Singh, Senior Research Analyst, Currencies, joining in. Priya, welcome to the show. Priya, my first question coming to you is clearly what's the kind of range we're expecting with regards to where the dollar goes? Because a couple of events that we have is where Fed Chair Jeremy Powell will deliver his semi-annual monetary policy testimony to the Senate. And secondly, with regards to where US is looking at a temporary tax holiday in gasoline. So how are you expecting these factors to impact the dollar index?
Well, as we know that Fed is quite, poised on getting the inflation number down, and Biden saying that they are considering relief on the tax bracket on the natural gas will definitely aid into the, will pitch in into getting the natural gas prices lower. Because apart from that, if you look at the main headline was that they'll even stop the export till 1st September in order to build up the stockpile into the country. So I think these steps will, at least the momentarily halt on the export will help. Will send some relief on the natural gas prices, of course, unless there's some relief that will be brought on by the Biden on the tax rate. I think that will factor in after it comes into effect on the inflation numbers. But overall, I think between the past and the coming up policy meet, I think there's not much of a data point to consider, in order to, what will be the stand of the Fed. Before that, we had GDP data, we had inflation numbers, we had such numbers, which could have directed where the Fed will stand. But I think if you look at the statement quite carefully, they have left the door open for the rate hike between 0.5 to 0.75. And looking at the dollar index momentum and the kind of behavior the US yields is doing, I think the market is already discounting a 75 basis rate hike in the upcoming policy meet. So I think dollar index will hold its ground between 103, 105 levels, at least until then.
Okay. So we're taking that into consideration. How are you expecting the Indian rupee to move? Because the foreign fund outflow is something that could probably restrict the appreciation bias in the rupee as well.
Well, if you look at the kind of FII outflows that have happened from the domestic market, so people are only seeing the FII outflows from the the sold off that they had done onto the exchange. But how much the quantum of that money has been taken out of the economy entirely is something that is not taken into the picture yet. So I think if you look at the kind of depreciation that the Indian rupee has done, it could be said that the FIs may have sold off into the exchange, but the outflow from the economy is still not not that has happened yet. Secondly, I think if you look at the yield numbers, the India has the highest yield right now. And again, the interest rate, if you look at the interest rate, it is the highest as compared to the US, even if both the countries go for a rate hike. So down the line, I think India will again become attractive and the inflows will come, taking into consideration the whole theory of high yielding currency. And second thing is, I think if you look at the inflation numbers, it has softened a bit. And going forward, I think if the food inflation doesn't rise, we could definitely see some relief that can happen on the fuel prices also, because India has aggressively, increased its capacity in the imports from the Russia. So going forward, I think even the RBI will honor its commitment of not letting the rupee depreciate aggressively, and we are not seeing much of a depreciation on the Indian side. I think we have remained of the view that the maximum depreciation that it could see is 78.55, and therein we are not seeing much of the depreciation on the Indian rupee.
Right. And moving from there on, overall, if you go to see, The euro as well has risen today, and it's taking some bit of support from the ECB's plan to raise interest rates to contain inflation, while the yen has retested a 24-year low as the Bank of Japan's ultra loose monetary policy stance has continued to weigh. So, how are you seeing the euro and the yen as well?
Yes, euro has been getting some positivity from what could happen into the next monetary meet. I think major of the positive sentiment is coming from the back-to-back action and the statement that has been coming from the ECB side. They are stating continuously that they are working towards getting the inflation down. It has gone beyond their, beyond their acceptable levels, which is true. The aggregate inflation standing at beyond 8.2%. I think the next major positive statement would be that they are taking steps in order to get the yields down. Now, Italy has been witnessing quite a volatile yield, so a lot of discussion is going around how to get the volatile movement on the yield under control. And thirdly, I think they coming into talks with respect to raising the rate hikes is also a quite positive sign for the euro. But at what quantum will they be doing is something of wait and watch game, because if you see the UK situation, they have done they have done 5 back to back rate hike, but the quantum is quite slow, and plus aided with the kind of help the treasury department is doing in order to support the cost of living, the high cost of living. Um, Not much could be derived from the outcome, because inflation will again come at the higher side. So I think the quantum matters. If they do it aggressively, I think only then they'll be able to get the inflation down. But of course, at the cost of the economic recovery, and taking into consideration that only few of the economies are doing well, Italy and Spain and such economies are at the are almost debt ridden. So a lot of perspective that needs to be done, and I think it will be a very major event in the upcoming ECB meet as to what will be their guidelines and how they'll tackle so many ongoing factors. I think until then there could be some support that could come in into the euro INR. We had seen the daily momentum on the higher side, and it has recovered quite a bit from the lows. I think it could test 83 in the coming sessions. So that is the upside level that we are currently seeing right now on the euro INR. And euro USD, I think it has already tested 1.05, and I think it will continue to be around that level, 1.05, 1.08. That is the range that it will hold off.
Okay. So, what are the strategies that you would recommend?
The strategies that one can go forward is with going long into the euro INR. You can buy the euro INR above the level of 82.68. That is the best level to go long into the pair for a target of 82.90, 82, 83.10 with the stop loss at 82.40. So go long into the euro INR. The next, I think we are seeing quite a momentum into the GBP as well, but it will be a very risky trade. So go long above the level of 96.22 with the target of 96.55 and stop loss at around 96. So this is a GBP INR is kind of a long call because it is currently trading at 96.03. It did went in the intraday sessions to test the highs of 96.40. So I think the most prominent thing to go long will be above the level of 96.22. USD INR will remain in a consolidated range, and I think it has supported the level of 78 quite well. So unless it breaches the level of 78, 77, 90, we won't be able to see any downside. And for the upside, it should breach 78.25. So I think it will remain in the range of 25 paisa in the upcoming sessions.
Got it. So these are strategies one should watch out for as well. Thank you, Ria. Thank you, participants, for joining in.
Thank you.
Subscribe to our YouTube channel for in depth interviews of India Inc. and press the bell icon so that you do not miss our updates.